Imagine you land one of the most powerful jobs in the world, and it's your first meeting with the American people. The country's waiting on your decision. You tell us that rates aren't moving, followed with 1/4 of the board voted against your decision. And that's what happened at the Fed yesterday. So today what we're going to do is talk about what actually happened in that room, whether we've seen this exact fight before or not, and what this means for your mortgage rate, even though the Fed doesn't touch it. Let's get started. Kevin Warsh ran his first meeting as Fed chairman yesterday, and it did not go how you'd expect or what you were thinking, especially for his first meeting. This is a guy who spent years on the outside ripping the Fed apart. Okay, he's literally been calling for a regime change at the central bank for years. And because of all the noise that he's been saying over the years, when it was his turn finally for him to get confirmed by the Senate, his confirmation vote was 54-45. Okay, that's the closest vote in modern history. This guy literally, for his first meeting, he walks in, and in his first meeting, 3 members dissent against him. You know how crazy that is to have 3 dissenting members on your very first board meeting? Since 1990, out of the 270 meetings that the Fed has had, only 10 times has the board had 3 or more dissents. Okay, that's less than 4%. In fact, 1970 was the last time a chairman had 3 dissents to kick off his tenure. The novella started, and I'm here for it. Despite the dissents, Warsh held with the Fed funds rate at 3.5 to 3.75%. The 3 dissenting members all voted in the same direction. They believe that the economy is too hot and that we need to raise the Fed funds rate by 1/4 point. And if you watched my previous videos with regards to oil, the war, and the possibility of runaway inflation, I can't say that I disagree with those dissenting board members. But for now, yesterday marks the 5th time in a row that the board has decided to maintain the current rate. And another interesting takeaway, Walsh, he was not the loud and outspoken civilian like he's been in the past. Okay, as chairman, his written Fed FOMC statement, it was the shortest that we've seen since Greenspan. Okay, over 20 years ago. Yesterday, I pointed out that the Fed is no longer giving forward guidance prior to board meetings. This is because the Fed, or Warsh, wants the market to do what the market does without government influence, which I agree with. But I don't think anyone expected for him to come out with an FOMC statement as short as this one. On average, FOMC statements are anywhere from 350 to 800 words, okay? Walsh, his statement for his first big meeting, 166 words. Not even half of an average statement. Now for your history lesson. In the world of central banking, a 3-vote dissent is equivalent to a public shouting match. All right, the Federal Reserve goes to extreme lengths to protect the unity, the stability. It all happens to do with making sure that everyone is on the same page to help protect financial markets. And to help protect financial markets, the Fed usually likes to operate like a well-choreographed play, okay? Most decisions, they pass almost all together, like a 12-0 vote. Sometimes there's a lone person that says no, and it's 11-1. But very rare. Most of the time, it's 12-0, 11-1, and that's about it. Having 3 voting members publicly vote no on a single rate decision is rare, okay? It's only happened a handful of times in modern history when discussing the Fed. It signals that the consensus inside the room has completely broke down. Essentially, they're not like a symbolic protest, okay? What somebody said is that they're a signpost for a future policy. When 3 members vote to hike rates while the chair wants to hold, it tells the market that there is a solid 25% of the committee that believes policies are already too loose and inflation is already out of control. That action instantly kills any hope for future rate cuts, and it puts investors on high alert for a rate cut at the upcoming meetings. The last time 3 Fed officials dissented together in the same direction was back in September 2016. Since I did the research, I'll mention their names. It's Esther George, Loretta Mester, Eric Rosenberg. Okay, all 3 looked at Janet Yellen and said, holding is the wrong call. Raise it, meaning raise the federal funds rate. Yellen, she held anyways, right? And 3 months later, December 2016, the Fed hiked. The hawks were early, but they weren't wrong. And this is the same thing that just happened yesterday. However, to be fair, the data actually points in Warsh's direction, okay? Inflation went from 4.2% down to 3.5%, according to CPI. GDP came out today and posted a growth of only 1.5%. Expectations were that GDP were going to be from 2 to 2.1%. So that's over 0.5% below expectation. Most importantly, the personal consumption expenditures, or the PCE price index for short, also came out this morning. This is the Fed's favorite method of measuring inflation. So core PCE came in at just 0.1% higher month over month. That's an annualized rate of 1.2%. This is well below the Fed's target of 2%, okay? So the numbers are backing up Warsh. So either those three dissenting members are seeing a fire that probably nobody else has spotted. Iran, $100 oil, 1970 stagflation, or 2016 repeats and Warsh caves in a few months, okay? And who the hell knows, right? I'd be lying if I told you that I did. Now, here's the part that actually hits your mortgage rates. The Fed held rates yesterday, right? Didn't move. But while the fight was happening in D.C., mortgage rates dropped 4 basis points that very same day. That leaves the 30-year average sitting at around 6.65% this morning. That's the lesson. I keep hammering, at least, over every single day. The Fed isn't your mortgage rate. The 10-year and the bond market are. And those two places already made up their mind before Warsh even opened his mouth to start speaking. So if you're sitting on your hands, right, waiting on the Fed to cut, right, before you do anything, just know that the Fed is the wrong scoreboard. It's the 10-year Treasury and the bond market. And if you're considering buying a home or refinancing a home and you want to get real numbers and you live in Arizona, Texas, or Colorado, please DM me and we'll get in touch. And as always, please remember, life's not meant to be, it's meant to create. Too strong.